So hello, welcome, and yeah, extremely happy to see so many names. Today's webinar is why climate change must be material, exploring the ESRS E1. So we'll be running a Q&A at the end of the webinar. So if you do have any questions, feel free to drop them in the chat. You can see that at the bottom of your screen. So yeah, feel free to just pop any questions in there. We'll also be recording the session, so if you do miss anything, don't worry. We'll send that across afterwards in an email that was signed up to this session. So if we get stuck in, so my name's Sebastian, and I'll be the host. I'm a senior consultant in the climate team here at Nordic Sustainability. But far more interesting than that is this group of esteemed guests. We've got the pleasure of being joined by a trifecta of ESRS knowledge. So we've got Dida, who is heading up the ESRS team in Nordic Sustainability, and she's been here for the last 6 months or so. Previously was supporting EY's endeavors around ESRS. We've got Maria, who leads our ESRS climate team and knows all things about carbon reporting. And last but certainly not least, we've got our guests from Lundbeck, Anya. And Lundbeck is a global pharma company specializing in brain diseases. And Anya's been leading the environmental work for the past 16 years or so, which is a pretty phenomenal innings, if you ask me. So the plan today, if we go to the next slide, is to go through an introduction to ESRS, which Dita will be leading. That will be followed by the ESRS E1, and that's Maria. And then we're going to be completing that with an industry perspective from Anya. And then, as I said, there'll be some opportunity for question and answers at the end. So without further ado, I'll hand over to Dita, who will start with an introduction to ESRS E1.
Yes. And I think we will jump right in and talk a bit about this tsunami of regulatories we see, and start by the European Green Deal, which was approved in January 2020 by the European Commission with the aim of making Europe climate neutral in 2050. The plan here is to review each existing law within climate and also introducing new legislation such as circular economy, biodiversity, farming, and so on. But let's talk about the purpose of today's session. Here in the middle, we have the new directive CSRD, which is short for Corporate Sustainability Reporting Directive. The aim is to provide comparable and equal sustainability reporting for companies, but most of all for the company stakeholders such as investors, employees, customers. Further, will the sustainability statement now be included in the company's financial statement and will therefore share an equal importance for the companies? Last but certainly not least, we have the underlying ESRS, which is short for European Sustainability Reporting Standards, and you will see them here in the middle of the CSRD. Let's dig a bit deeper into these standards then. What you will notice here is a comprehensive scope of requirements and data points, which will require companies to rethink their reporting and sustainability strategies. And the starting point is by conducting a double materiality assessment, which I will come back to later on and explain a bit more about. Looking at the standards, first two are the cross-cutting standards, which are mandatory for all companies subject to the CSRD. Here you will find the general requirements on how to conduct your sustainability statements going forward, and the first line of mandatory disclosure requirements telling companies to conduct a double materiality assessment, having a clear overview of the company's strategy, governance structure, internal controls, and risk management. Further, we then see the 10 topical standards. Here you will see that the 5 of them are within environmental statements. Then we have the 4 within social and 1 within governance. Yes, let's dig a bit deeper into these standards then. and focusing a bit more on this double materiality assessment that I will explain a bit further. That is now mandatory for companies to conduct this double materiality assessment. And then we have as a minimum 92 sustainability matters that needs to be included in this assessment. The topics that are spread between the 5 environmental standards, where the companies then will have 36 sustainability matters to address, and they will have 66 social matters to address, and then only 8 for the governance matters to address in this double materiality assessment. So who are then subject to this directive CSRD? In total, we have 4 waves for now. We are expecting this to expand. First wave we have are the large listed companies with over 500 employees. These companies' first official report within the CSRD will be in their financial year of 2025, based on their 2024 data. This is where Lundbeck will have to report, for example. And so it will drill down from here to the large companies, the small listed companies, and so on. And what does this then entail for the companies? Looking at the road towards compliance, companies don't just have to conduct their double materiality assessment. They will also need to set targets, develop their strategy, establish governance and action plans. And at the end of this long road, where you can see there are many steps ahead, they will then be able to write their sustainability statements and be compliant within the ESRS. So I mentioned a couple of times now that I wanted to explain the double materiality assessment. And yes, it is mandatory. And as we just seen in this, it is the first steps towards compliance. So what is a double materiality assessment? It is a filtering exercise for companies. By using these 92 sustainability matters that I spoke of earlier, the companies will then look at which impact, risk, or opportunities each of these matters have to the company, which will then lead them to which matters that are material or immaterial to the company to report on. The first here you see, this is also the reason for the name, the double materiality. Companies have to first look at impact materiality, that is how a company impacts the planet and society, and then the other way around, financial materiality, how the sustainability matter then affect the company's business development or performance in terms of risk and opportunities. Lastly, I will talk about the 5 key shifts we see from the old way of doing sustainability reporting. The first is this mandatory double materiality assessment. The materiality assessment isn't new to all companies, but the double-sided effect is. Then through the double materiality assessment and the entire report, actually, companies has to consider the entire value chain from cradle to grave. So this will be a massive work for companies to dig up data. Companies also have to connect their material impacts to their business model and their strategy, which also new. And then transparency is key. Companies need to be transparent in all their processes and steps taken during the assessment and reporting. And lastly, expand data capacity. Companies has to improve ways of working with data, collecting data, upscaling on resources. Yeah, I think that covers pretty much basics of CSRD and ESRS.
Thank you, Dede, for a good and thorough introduction to the ESRS. I will now go into more details on the climate change ESRS standard, namely the E1 standard. The planet is currently nearing an irreversible climate tipping point, and immediate actions are required to transition to a low carbon economy. The Climate Action Tracker tracks the emissions emitted and the effect of policies, pledges, and targets towards limiting the global warming to 1.5 degrees as agreed upon in the Paris Agreement. And as we see on this graph, only looking into policies and actions, we will near a temperature between 2.6 and 2.9 degrees. Taking into account targets and pledges also, the global warming will still be reaching a temperature rise of 2 degrees. And even with the most optimistic scenario here, we are not on the track to reach the Paris Agreement with limiting global warming to 1.5 degrees. All companies, some to a bigger degree than others, emit greenhouse gases and thereby contribute to climate change. And therefore, climate change must be a material impact for almost all companies. And we really need all hands on deck to decarbonize and transition to a low carbon economy. As Didi explained earlier, the double materiality functions as a tool to identify which topics are material for your company. And if climate change is identified as material through the double materiality, the consequence of that is that your company needs to do annual reporting on climate change according to the disclosure requirements set out in ESRS E1, the climate change standard. The ESRS climate change disclosure requirements are set out to push the decarbonization agenda forward. So on top of the usual greenhouse gas accounting for scope 1, 2, and 3, companies also need to disclose a 1.5 aligned target and implement reduction roadmaps. Furthermore, companies also have to disclose action plans and resource allocations to reach these targets and disclose the financial effects of climate change risks and opportunities. The standard divides the data points into 9 disclosure requirements, where the first disclosure requirement regarding a transition plan for climate change mitigation contains quite a lot of data points, or 32. Other areas have fewer data points, such as the internal carbon pricing scheme only has 4. So it varies quite a bit between the areas how many data points there are to report on. The data points associated with each disclosure requirements can be seen in the small circles below. And in total, the data points of the climate change ESRS are 116, which is quite a lot, but not all data points will be of relevance for all companies. However, reporting on all or even just some or most of these data points can seem like quite a heavy task for most companies to get through. These 116 data points can be broken down into 3 concrete projects. And I always really like to start with understanding. So meaning to understand the impact that the company has on climate change. So calculating and reporting on greenhouse gas emissions that the company emits. And then the natural next step will be to figure out how can we reduce those impacts by drafting a plan and setting targets. The third project would then be to capture how to manage these impacts and financial risks and opportunities that arise with climate change. Let's now have a deeper look into the disclosure requirements and start again by understanding with the greenhouse gas inventory. And we believe that a comprehensive greenhouse gas inventory is the foundation for decarbonization. if you don't know where you are today, how can you know where you want to be in a couple of years? And by having a comprehensive greenhouse gas inventory that follows the rules and requirements of the Greenhouse Gas Protocol, this inventory will give you a lot of the answers to the disclosure requirements and data points on energy consumption and energy mix, how much renewable energy you have and what kind, scope 1, 2, and 3 emissions, as well as information on greenhouse gas removals or carbon credits. And one of the data points requires that all companies must disclose their greenhouse gas intensity per net revenue. This will allow stakeholders and investors to compare companies within sectors and choose to, for example, invest in lower emitting companies. And it will be quite interesting to follow how much this will be used when a lot of companies are starting to report on ESRS. But there are also many things to be wary of, as greenhouse gases can be calculated quite differently between companies and therefore sometimes not be very comparable. Reporting under the climate change ESRS requires a disclosure of climate targets and the resources allocated to achieve those. The targets need to limit global warming to 1.5 degrees and be set for the year 2030, and if applicable, also for the year 2050. The target setting mechanism follows mostly the same requirements as the Science Based Targets Initiative, but the target year here is 2030, whereas for SBTI, the near-term target is within a 5 to 10 years time frame. The targeted reductions needed in scope 1 are as the same as for SBTI, 42%, and for scope 1 and 2, and scope 3, 25%. In the ESRS, the intensity reduction targets are allowed, but then companies also need to disclose the total absolute emission reductions or increases if they have. And the latest baseline year allowed is 2020. Once companies have set a 1.5 aligned target, they will be compliant with the disclosure requirements of the fourth within the fourth area here. And also companies will need to disclose key actions to achieve those targets and the resources allocated to achieve those targets, both in terms of staffing, but also in terms of OPEX and CAPEX amounts. Companies will need to disclose the financial effects from risks and potential opportunities related to climate change, and if applicable, also their carbon pricing scheme. The financial effects are divided into material physical risks and material transitional risks. The material physical risks arise from the impact of natural hazards on physical assets. For example, the risk of a company's production site to be damaged in flooding. The material transitional risks describe the financial risk of a company to transition to a low carbon economy. So for example, if you're an oil and gas company, you will have significant financial transitional risks. The potential opportunities describe expected cost savings from transitioning to a low carbon economy. For example, cost savings on raw materials by implementing a closed loop recycling or energy efficiencies. And if a company has an internal carbon pricing scheme, it shall be disclosed how it supports decision-making and incentivizes the implementation of climate-related policies and targets. But if companies do not have an internal carbon pricing scheme, they just have to state so. So this is one of the areas where the data points are not applicable for all companies. And now we're back to the first disclosure requirements point as we started with the understanding. And Now we are at the first one, which has to do with the transition plan. And the requirements of these first two areas, transition plan and climate policies, are quite comprehensive and include a lot of data points. But these are also the areas where it is acceptable not to provide the required information, or to say that we are on the road. We don't have all the answers yet, but we are planning towards it. And in the transition plan, it is required that companies explain how the targets are aligned with keeping global warming to 1.5 degrees. What are the key decarbonization levers for the company? Explanation and quantification of the investments and fundings set aside to implement the transition plan, and how it aligns with the overall business strategy and financial plan. But as said earlier, in case companies do not have a transition plan, they shall just indicate whether and when it will be adopted. For the climate policy area, the company shall disclose how their policy addresses impacts, risk, and opportunities related to climate change. But also here, companies may report that they don't have policies, but then need to state a reason for it or a time frame for when policies are planned to be adopted. As you probably have gotten a feeling of during the last couple of minutes, reporting on the climate change disclosure points on a yearly basis will be very time consuming for most companies, and especially here in the beginning. So do start your preparations early, especially if your company has several topics that are deemed material through the double materiality. It will be a lot to report on in the first years. So it's a very good idea to get started early. And often it's good to start with the climate change area, as it is maybe more tangible than many of the other ESRS areas, and something that companies already are working on. Many companies have already a GHG inventory or have set targets and are already working on with climate change. So it can be also a familiar zone to start in. This will be the last words for me. So thank you so much for listening in.
Thank you. And then I will take over. And thank you for inviting me to this webinar. In my presentation, I will try to give you a bit of a practical insights in how we have been working with complying with the directive. But first of all, very short, who is Lundbeck, our climate targets, the governance and planning of this directive project that we call it, how we have been scoring and assessing climate change, and the challenges and recommendations I would have for you. So next slide, please. So as Sebastian said, Lundbeck is a pharmaceutical company specialized in treatments for brain diseases. And we have the entire value chain from research and development to the actual marketing of the products. We have set climate targets. We have a net zero target in 2050, but we also have a midway target running from 2019 to 34, where we have a 65% reduction in scope 1 and 2 and a 40% reduction in scope 3. So these targets are aligned with Science-Based Targets net zero guidance. So next slide, please. So when we realized that we were going to comply with this directive last year, it was very clear that we needed to establish some governance and an actual project about this task that was landed in at our tables. So we established a project organization where we have board of directors and executive management on top, consolidating the results and the decisions in the project. Then we have established a steering committee, which is chaired by our CFO, but there are also 2 other members from executive management in the steering committee and a few managers from key departments in the organization. For instance, the department I'm located in, the Corporate Health, Safety and Environment, and the Sustainability Department. Then we, of course, have project management. In the beginning, it was the Sustainability Department, but as we approach the financial assessment, it went over to finance. So at the moment, it's finance that is managing the project. And then we have a lot of subgroups with subject matter experts. So it's my department, Corporate Health, Safety and Environment, People and Communication, Sustainability, Finance, Patient Safety and Insights, and Commercial Operations. And underneath these 6 pillars, there are kind of subgroups supporting in the impact assessments. Next slide. Yeah, we of course also made a high-level planning of the project where we started with preparing a gap assessment, realizing that we had quite a lot of gaps. And then we started with the impact assessment, which I will go deeper into in a second. After that, the financial assessment followed, and at the moment, we are gathering the double materiality. And next week, we hope that management will consolidate the results from the double materiality. And then when we know what sustainability matters that have been decided as material, we will, of course, dive into all the work that you've heard about already, about targets, strategies, KPIs, etc. Along with the process that we've had so far this year, a gap assessment have also been done on our internal procedures. And it's finance that have been assessing all our reporting procedures and looking at gaps, comparing with the requirements in the directive, because we need to be able to have all our data assessed by external auditors. So next slide, please. Yeah. And as you've heard already in this webinar, we are supposed to make an impact assessment, and this impact assessment has to include an assessment of severity, where we look into the scale of the sustainability matter. So how grave is the impact that we have as a business, the scope, how widespread it is, and the irremediable character. So how could we remedy the impact that we have on planet and society? And then we also need to consider likelihood. For a lot of the environmental topics, and especially for the climate topic, it is actual impacts that we have, because we do emit CO2 emissions already. So here we do not need to assess likelihood. But for other topics where maybe we're not impacting on a daily basis, but potentially in case of an incident or something like that, we could impact, and then we need to assess likelihood. So next slide. And here I have been diving into our approach within the impact assessment. So here you can see we have developed some scoring for the scale, for the scope, and the irremediable character. And in the beginning, we were trying to find out how we should build these scales at ourselves, but it turned out that it was quite difficult, and that was actually here that we invited Nordic Sustainability to help us developing these scoring methodologies. We were from the very beginning very focused that we would like our scoring scales to be very data driven, so that we could kind of rely on data and assess based on data. And for the climate area, we do not have any legal requirements within climate as a business, but we do have our targets. So for the scale, it was obvious that we should use our target trajectory to have the kind of the foundation of the scale in the scale parameter. So if you look at the second column, you can see that we have considered a minimal impact is if we have reached net zero. We have our net zero ambition, so it would make sense to have that as the minimal impact. And then we have just kind of divided the scale in different buckets where if we are in line with our target trajectory, we consider we have high impact, and then of course even higher if we're not following our target trajectory. And the reason why we decided that to be in line with target trajectory is a high impact is that we know that we're emitting a lot of CO2 emissions. So we do have an impact. But of course, these scales can be up for discussion. Then for the scope, it was quite clear from the beginning that we didn't need to assess very much because CO2 emissions do not accept country borders. They are kind of all over as soon as they are emitted. So we consider those as global total, so as a 5 in this scoring methodology. And then for the irremediable character, we were in the beginning discussing, well, to what level, how much should we actually remedy? It was clear that it was not possible for us to undo climate change, so to speak, because they're there, as Maria has told, and we cannot, change that. But what we could look into is, well, what would it take for us to emit zero emissions from day one, you can say. So with the emissions that we have at the moment, if we should kind of align those with zero, we could buy carbon removal solutions. So then we've actually just been kind of multiplying our CO2 emissions with a price on carbon removals. And then we have divided in the scale in different financial buckets, which is aligned with our enterprise risk management system that is existing already. So we're using a financial scale that is existing in Lundbeck already. So this is how we have built the scoring methodology. And at the next slide, I've just tried to illustrate the scale for our scope 1 and 2 emissions, so for own operation. And here you can see the black line is our target trajectory. And at the moment, we are 16% under our target trajectory. So that is good. But still, it's a 3 in our scale for the scale category. And then at the next slide, you can see our scope 3 emissions. And here we are slightly above our target trajectory. So that leaves us into a 5 in the scale of our scoring methodology. So that's how we have done the impact assessment on climate change. And then I'll move on, next slide, to the financial assessment. And here we, of course, started identifying risk and opportunities at the beginning. And it was fairly easy for us to do this exercise because we have been responding to Carbon Disclosure Project for many years. And here we need to consider risk and opportunities and also the related costs. So we did kind of have this information already. So then we moved on to the methodology that our finance department have developed, and it's on the next slide. Oh, I think I'm missing a slide. But anyway, our financial department have developed a matrix with the same financial scale as we were using in the climate scoring methodology, and then a likelihood. So we just took risk for risk and opportunity for opportunity and made the financial assessment according to that methodology. And then the impact assessment and the financial assessment have been combined in the double materiality. So all the topics, the sustainability topics that is considered material from an impact perspective are placed in the upper part of this matrix, you can say. And all the sustainability matters that are considered from a financial perspective is placed in the right-hand side of this picture. And if we look at the climate topic at Lundbeck, it places our climate change mitigation, both for own operation and value chain, in the right upper part. So it's material from both an impact and a financial perspective. But the climate change adaptation is only material from a financial perspective. So this is just to give you an insight in, well, how was the result actually being looking like for the climate part. And at the next slide, which is the last slide I have with me here, I will just try to talk a bit about the challenges that we saw and some recommendation related to the challenges. So first of all, creating the foundation of the scale in these scoring methodologies that we have used was very, very challenging. And that was also the reason why we decided to get some help from outside. Because you can build this scale, in so many ways. My recommendation is that to have data-driven scoring methodologies is really, really good, because we can see already now when we're presenting the impact assessments around in the organization, now we have something to discuss from, because we can maybe some people argue, well, a 4 should be a 3, or a 3 should be a 5, or whatever people think. But due to that, we have very clear definitions of what is a 1, what is a 2, and what is a 3, and so on. We can just adjust the scale, but we do have a good foundation for a scale. Then the next challenge was definitely the irremediable character. As I mentioned before, to what level, how much should we remedy the impact on on people and planet? And generally speaking, we decided to say, well, we cannot undo pollution and all the impacts that we have, but we could consider the situation if we have no pollution, no emissions at all. And that's the basis we have been using in all our scoring methodologies. Then the level of ambition. As I said, we are already being challenged on our scoring methodologies, because I have colleagues that think if we are complying with law and we are online with our target trajectory, then we should be on a low level. But yeah, that is something that each company has to decide. And I'm very curious when we start to look into the reporting in the future, how can companies align these levels of ambition in order to make it comparable, all this reporting. The next challenge is lack of data, and it's in many ways, but especially when we look into value chain, as Maria mentioned, it's going to be a huge job to gather all the needed data. And we have actually been using industry assessments and standards, and we've also used the WWF risk tool. I can recommend to use that for water and biodiversity in order to get some kind of data that we could use in our assessments. And then the last challenge is alignment with other departments. we very fast realized that communication with all the involved departments, especially those that are sitting with the project management, is very, very important, because it's so easy to move in different directions in your methodology and in your approach. So it's really important to have this alignment and communication with all the internal stakeholders in your organization. And the last recommendation is that do allocate sufficient time and do accept that this is an iterative process. We are stepping on new stones all the time, so we will need to adjust, and we have been adjusting our scoring methodologies many times already, because then when we started assessing and we saw the result, it was just like, but this doesn't make sense, so we need to adjust. So it's definitely an iterative process, and you just need to accept that. That's at least our recommendation, in order not to be annoyed and confused and everything when you go along with this. So that was the words from me.
Wonderful. Thank you so much, Anya. And I think, yeah, your last point there is something that we hold true. It's definitely a process, and I can imagine it's quite a steep learning curve. So we've got a nice chunk of time to go through some question and answers. So thanks very much for everyone that's added those to the Q&A box at the bottom. So to begin with, talking about double materiality assessments. So is there a methodology recommendation by the CSRD for double materiality assessments, was the question. As far as we understand it, at Nordic there isn't, that we found, but we do have a pretty good tried and tested approach, which Dita can elaborate on now.
Yeah, so the standards doesn't really explain that much about how the methodology should be conducted, but they do give some, what you would call them, hints and important matters to include. It is on purpose that they haven't released any methodology yet. They are working on some limited methodology for now, but they are afraid to give a more concrete methodology in terms that the businesses and organization who will need to use it are very different. So they will need to conduct it very differently. But you will find in the two first cross-cutting standards, ESRS E1 and ESRS E2, here you will find some methodology behind it and can read a bit about it.
Great. There were also some questions on social impact and impacts of biodiversity around climate change. Anya, I wonder how your experience in this process, how those impacts were uncovered in the ESRS process.
Yeah, especially the biodiversity was really, really challenging, because we hardly have no data. So the way we approached it was that we were looking into industry assessments, so how pharma companies were assessed, and what the triggers, I think they're called, for impacting biodiversity are considered for the pharmaceutical company. And here they were very strongly linked to how we as a business pollute. So we actually kind of used some of the scoring methodologies from the pollution area in order to decide, well, how much are we impacting? But then we've also used the WWF risk tool for doing the assessments within this area. And yeah, that's the approach we generally have used, that looking into industry assessments and trying to figure out, well, how can we use this information? And accepting that for most value chain assessments, we are scoring very, very high, because we need to rely on industry assessments until we get real data from our suppliers.
Great, thank you, Anya. So we have a question on greenwashing and transparency. So how is transparency ensured? Maria, I wonder if you might take this one and put your thoughts to that.
Yeah, so I think what the ESRS standard is trying to achieve is to get the environmental data to the same point as financial data has been gathered and disclosed of for really many years. So it will definitely draw upon some of the learnings from that, and at a point it will receive the same status as financial data. But we don't know exactly now how that compliant process will be, as we are still getting used to these new standards. But definitely having the disclosure requirements really laid out one by one will help not to discover some of the greenwashing claims that have been done. For example, just that the scope 1, 2, and 3 emissions are set aside, and then you have carbon credits and greenhouse gas removals in another disclosure point. So you will not be able to combine those and thereby report lower emissions than you really have.
Thanks very much, Maria. So quite a big question. What happens if a company decides, never mind, don't need to do this. What happens, Dida?
Yeah. So when a company, if they decide not to do this dot materiality and actually conduct the sustainability statements, they will get a fine. It's not public yet how this fine system will look like, but it will be the same as if you're not going to do your financial statements, as this sustainability statement will be part of your financial statement going forward. And that entails that you will need limited assurance for the first years, which then speaks into one of our other questions about the auditing. So you will have to get limited assurance for the first couple of years, and I think in 2028 they are talking about changing this to reasonable assurance, and that way you will get you will have to get checked through all your from your double materiality to all your data points, which also can help prevent some of the greenwashing that Maria talked about before.
Great. Because it sounds like there are so many different directions companies could take. Anya, I wonder how you looked at this approach when you first started, because I can imagine it felt slightly overwhelming when you first came across the data. How did you start off?
I don't know. Well, we started with this gap assessment where we just went through all the disclosure requirements, and we were just like, it was so overwhelming. We were quite comfortable within the climate area because we are fairly mature in this topic, but for almost all the other areas, we do some reporting, but definitely not that much reporting. So I can only say it was really, really overwhelming, but you just need to start and take it step by step. And yeah, we have been employing new employees. We've got one new employee in our department because we realized that this is going to be a big task. And in our finance department, they have already employed 2 new employees. And then we have been using consultancies as well to support the process. Yeah, because it's really a lot of work.
Yeah, and as you said, it's an iterative process, isn't it? So it's not something you need to get right overnight. It will take time, and you'll learn as you go.
Yeah, and it was in the beginning. It was really, really frustrating. To be honest, because there are so little guidance. So you were just kind of everything was left up to you, and yeah, so it was, yeah, it was a bit frustrating in the beginning.
Yeah, I
Yeah.
can imagine. And that actually links really nicely to another question that we had. So there was someone asking about identifying data points inside the ESRS. You'd think that perhaps there's a big appendix, but maybe Dida, you want to elaborate on that?
Yeah, so actually we don't have a big appendix yet. They have promised us to get a more precise appendix, but if you do a deep dive in the 12 standards, ESRS standards, you will find that all the data points, both the qualitative and quantitative, they are very precise, lined out for you. And you will both have them in the top of the standards where they are more explanatory, and then you also in the bottom have the part called application requirements, where they go more in depth with all the data points. So that is actually fairly easy to find, but it is comprehensive and there are a lot of data points.
Nice. There were some specific questions on climate. So I know a lot of organizations have got strong maturity here. So maybe they've done science-based targets, verified greenhouse gas inventory, or perhaps they've got an LCA on some of their hero products. Maria, I wonder where that kind of work fits into this whole process.
Yes, so if you've got an SBTi aligned target already submitted and validated, then you're quite far on the way to check the boxes within the ESRS E1 standard. If you have been doing LCAs on maybe your biggest selling machine or whatever you have, it can definitely help you with a lot of data. So you will get a lot of data on climate, but depending on how many impact categories you have in your LCA, you will also get data on a lot of the other things, such as water scarcity, biodiversity, or marine life, and so forth. So it can definitely be used for a lot of the data points, but specifically for the reporting requirements, you will also need to have a comprehensive greenhouse gas inventory, which has to do with the company as a whole and not just for maybe one machine or whatever you did the LCA on. But it's definitely going to help you a lot in understanding your impacts in a lot of these REST areas.
Great. There were some questions on smaller companies that don't fall into the current requirements. And I wonder, Dida, if you can maybe touch on how smaller companies are being affected by ESRS as part of supply chains of bigger organizations.
Yeah. So the smaller companies are not subject to the CSRD or the ESRS yet. Though we have heard that they will outline a process for them, maybe from 2029 or 28. We are not sure yet, but I will encourage all small and medium-sized companies to also start looking into this, because they will be involved if they have in their supply chain, value chain, in some point, one of the bigger companies, because the value chain and supply chain for all companies will be affected of these standards. And there will be some new guidance for small and medium-sized companies coming out. Maybe we will already see the first draft this year, or otherwise in the beginning of next year. I think we will see the first draft where they will explain more how a small, medium-sized company could take this into account, so they can help their supply chain or value chain collect the correct data, and how they can be more sustainable also.
Great. Anya, one for you. As I know you can't talk too much because it's not been published yet, but was there anything very surprising in your ESRS process? You know, one of the topics was more material than you anticipated, or less material than you anticipated. Can you speak to that?
Yes. Well, we did get surprised on our way on some of the results, but as I said in my presentation, then we actually did a kind of reality check on the results and did compare, especially the topics so pollution areas, how would we expect that to be scored compared to the climate area and so on. So we did some reality check, and then we actually, if something looked strange, we revisited the scoring methodologies, and that was actually also the good thing about being very, very precise on the definitions of what is a 1, what is a 2, what is a 3, because then you can go back and consider, well, maybe it doesn't really make sense. And for instance, for biodiversity, we changed the entire scoring at a quite late stage, because it was just like, but this result doesn't make sense at all. So yes, we did get surprises, but then, as I said, it's an iterative process. Then you just need to go back and consider, did we have the right approach when we made the scoring methodology? And then we're just like, well, maybe it would make more sense to twist it in a different way. So yeah, a lot of back and forth.
Yeah, it sounds like it, and it's definitely an admirable position to be in, to be able to review the work you've done and think again on it, because I think it's that sort of vested interest, isn't it? You spent so much time on something, and then you want to follow through with it. But the fact that you could review it is definitely admirable. So that's really great to hear. We're just running out of time. So I wanted to say a few closing remarks. Huge thanks to our panelists, particularly Anja coming in from Lundbeck. I think it's very inspirational to hear how an organization has gone through this process. I think particularly for people starting out on this journey, it is very daunting. So we've got the boffins around us that can tell us all the details around it, but it's really nice to hear sort of a human perspective on that process. So thanks very much for bringing those insights today. Nordic is working with a lot of different organizations on this. So if you have any questions that weren't answered, or you want to elaborate more on them, please feel free to reach out to us, and we can do our best to try and support you through that question, and potentially afterwards. As I said at the beginning, the session has been recorded, so we'll make sure to send a recording out afterwards. It might be a few hours or a couple of days, but it should be in your inbox shortly. But yeah, that's us today. So again, thanks so much, Anja, Maria, and Dida, and we look forward to seeing all of the double materiality and ESRS align work coming up soon.